Web3 TV.
Crypto mortgages are here. Not yet, but potentially.
And the SEC debuts Project Crypto to bring U.S. financial markets on-chain.
What does this all mean for you? We're here to break it down.
I'm Lisa Amnegard.
I'm Adel, and you're watching Crypto TV.
The SEC is moving to reshape how crypto rules are regulated in the U.S. SEC Chair Paul Atkins has announced Project Crypto, a new framework to modernize laws for digital assets, stating that most crypto tokens don't actually qualify as securities. The goal of the initiative is to provide clear guidelines when a crypto asset is a security or an investment contract. It also outlines specific rules for token launches, including ICOs, airdrops, and staking rewards, and to simplify compliance for blockchain-native projects. The timing comes as tokenization of real-world assets such as stocks and bonds have seen explosive growth. In just 6 months, the market has surged 260% from $8.6 billion to over $23 billion. And platforms like Gemini and Kraken are already offering tokenized equities outside the US. Now, companies like Coinbase are seeking a green light from the SEC to offer these types of services to its American customers. The plan of Project Crypto also aims to make it easier to get licensing to launch so-called super apps, platforms that combine trading, payments, and messaging all on one platform, similar to China's WeChat or Alipay. These types of apps haven't really taken off in the US market. To streamline operations, the SEC is proposing a single federal license to replace today's fragmented state-by-state system. While many expected many of these initiatives to come through the market structure bill, the SEC is moving ahead on its own, signaling it won't wait as on-chain finance starts to play a larger role in everyday life.
U.S. Senator Cynthia Lummis just announced a new bill that could completely change the way mortgages work. The proposal would allow Americans to use crypto assets like Bitcoin or Ethereum to help qualify for home loans. It's a direct shot at traditional credit systems that often exclude younger or non-banked individuals. Senator Lummis says the goal is to modernize home loan eligibility to reflect the digital economy. Her proposal would require lenders to consider crypto holdings held for at least a year, adding stability and long-term trust into the equation. But here's where it gets tricky. Critics argue that volatile assets like crypto shouldn't be mixed into the already risky mortgage market. And regulators, they're worried about money laundering and fraud. Could this move finally bridge the gap between DeFi and real estate, or are we risking another 2008-style collapse, but on the blockchain? Lisa, I want to know what your take is on taking out a whole mortgage fully on crypto for a house.
Well, I think there's so much more interest when it comes to cryptocurrency, so I do think this is something that we could see in the future.
This is an interesting one because on the one hand, yes, crypto gains are, much bigger and to some degree also more riskier, but at the same time, less safer compared to traditional stocks. So how can you rely on crypto that can jump 20% or crash 20% to pay off your mortgage?
I think that's something that Cynthia Lummis has been discussing in this new proposal, and they still sort of need to figure out how they're going to deal with that type of volatility. But it is really interesting because I did read an article on the New York Times, and people do want to use their cryptocurrency when it comes to real estate. Christie's International Real Estate, a luxury brokerage, they've now opened a dedicated division that includes lawyers, crypto experts, to allow clients of theirs, either if they want to sell or buy entirely in cryptocurrency. So, and this all came about because somebody a few years ago wanted to, or the seller and the buyer, they only wanted to transact in crypto for a $65 million house in Beverly Hills. So from there on, they did realize they can't disregard cryptocurrency as a valid payment form. So I do think that the government needs to look into how they can facilitate these types of transactions at scale because, the buyers and sellers are already wanting to transact in this type of currency.
Absolutely. And with the advent of blockchain technology coming in place, making the buyer and seller meet and handshake in the middle without lawyers or other intermediaries, this is certainly helping with the the overall trend that super apps, like you mentioned, incorporating crypto payments, messaging all in one, these sort of all-in-one platforms is really going to change the way we interact with crypto.
And I also really think it's interesting when it comes to tokenization, because technically you could tokenize debt as well, which would be a game changer when it comes to, let's say, mortgaging your house, but entirely as a tokenized asset.
Yeah, for me, the biggest benefit is that when you put it on a blockchain, it's 24/7. You've got that super fast, less waiting times, and the transactions are super, super swift with very minimal effort needed and no intermediaries involved. That's my biggest takeaway from this. But like we said, time will tell, and we'll see how it happens.
And that's all that we had for you today. I'm Lisa Amnegard.
And I'm Adel, and you're watching Crypto TV.
Web3 TV.